Fatih Birol, the Executive Director of the International Energy Agency.
Oil demand growth, India is strong, continue to be strong in terms of demand. But the news is the U.S. Oil production, which declined last year, 2016, now reversing the trend. And 2017, this year, U.S. production is going to increase significantly.
Okay.
And this will give a different dimension to the oil market discussions.
So can you quantify for us when you say that the U.S. production is expected to increase significantly, what would that mean?
So we will announce this in 2 hours of time, but it will be a couple of 100,000 barrels per day. And if the prices remain at these levels or above, I can expect that we can well revise up this number in the next months to come.
Okay, so what then is the price outlook? Because if I were to look at what happened in 2016, prices were up, what, about 48%. Given what you're telling us in terms of both demand as well as output, what should we expect in terms of prices?
So last year when we met here, the prices were $28, and this year, and we discussed at that time, that this is not a price which is sustainable, and this year, indeed, we came to $55, $56. And if the current market dynamics are as such, as I told you, increase of demand 1.4, 1.5 million barrels per day, if the OPEC countries implement what they say they agreed, we may well see a rebalancing of the market in the first half of this year. But what will happen second half will be depending on the level of additional production coming from the United States. So my message is there will be an interplay between the Middle East producers and the high-cost places such as United States, Brazil, and which means that we are entering a period of greater oil price volatility. And this is important for countries like India because it will affect the trade balance, it will affect the inflation. Therefore, economic policies need to take into account the greater volatility in the oil prices, ups and downs and swings.
So when you talk about this greater oil price volatility and the fact that we're headed into that, what would that mean in terms of a price band then? Are we talking about 45 to 65 or, you know, where do you see this?
By law, I cannot forecast the price, but what I can tell you is that I expect that in case of producing countries sticking to the agreements, there may be a room to see the prices higher for some time to come, higher than to these levels. But the market response may well be strong to that, which means these high prices bringing new supplies from United States, from Brazil, from other countries, which pour in the markets, and this time putting downward pressure on the prices. So ups and downs, and therefore lots of volatility around the price levels you just mentioned.
You know, you were talking about the OPEC deal. In terms of compliance, what is the expectation? Do you expect significant compliance with what the OPEC has announced in terms of the output cut?
It is, of course, up to those countries to answer your question. But if they stick to the agreement, what they have decided, together with some non-OPEC countries like Russia, I would expect it will continue to put an upward pressure on the prices. And as such, we will see in a few months the stocks being diminishing, and we are going to turn to a rebalance of the markets.
Speaking of supplies from Iraq, Nigeria, etc., what is the expectation there that you're working with?
I mean, Nigeria is going through difficult times, such as Libya. There are some cuts as a result of internal issues. So is Iraq. In fact, when we look at the last few years, together with the United States, Iraq was another center of growth of oil supply, but Iraq is going through difficult days internally today. But despite that, increasing the production, maintaining the production, which is very important because Iraqi government needs revenues in order to address some of the internal domestic issues, geopolitical issues, which are very serious. So as such, the news which will come from Nigeria, Libya, is because of the domestic shortages, oil supply shortages.
All right, and we'll keep